This one time, Bitcoin went from 6 cents all the way to 36 cents, and then it crashed down to 21 cents. And then another time.
And by DCA Wednesday, we are right back where we were. TikTok, next block, zoom out, Bitcoin marches on. That, and we're less than 19,000 blocks away from the next halving. That and more on this latest edition of the Bitcoin Bulletin Podcast. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome back to the latest episode of the Bitcoin Bulletin Podcast. Today is Wednesday, December 13th, 2023. Of course, that means it is DCA Wednesday, but we certainly have a lot to talk about. As I alluded to in the intro between the last two episodes of the Bitcoin Bulletin Podcast, for those of you who are staring relentlessly at the price, we had a bit of a pullback as low as $40,000 or about $40,500, depending on where you're getting your data. And even Peter Schiff was out there doing victory laps saying, oh, look, Bitcoin's dead. It crashed. Blah, blah, blah. Of course, the price is often the news, but there's usually a lot more to talk about than just simple Bitcoin price, even though we're gearing up for the next halving cycle bull run. Before we get into all of that, let's take a quick look at the vital statistics. At the time of this recording, Bitcoin is sitting at a block height of 821,074, and Bitcoin's current US dollar value is ringing in at 42,910 US dollars per Bitcoin, or 2,330 sats per dollar. That's about $800 less than last DCA Wednesday, but a substantially higher level. We're up about $2,000 from that dip, that pullback that we saw just over the last couple of days, Sunday night in through Tuesday or Wednesday morning in this case. For those of you doing the math, that means we are 18,926 blocks away from the next halving, and it's currently looking like that is going to occur approximately on April 20th of next year. So TikTok next block, regardless of when that halving actually occurs, it's one thing is for certain, it's going to happen at block 840,000. Whether that block comes in on the 19th, the 20th, the 21st, or whenever, of course, depends on how fast blocks average between now and then. But the halving is coming. There is absolutely nothing anybody can do about it. And once it gets here, buckle up, Buttercup, because traditionally that is the official kickoff of the next the next parabolic Bitcoin bull run. It's usually about 6 months to a year after the halving where we see Bitcoin retake its all-time high. As Adam Meister says, Bitcoin always returns to its all-time high, and it usually does that about 6 months to a year after the halving date, and then, of course, goes on to that explosive face-melting, parabolic bull run that, the absolute peak of which only lasts a matter of weeks, where we reach stratospheric heights. Last time it was $69,000. Although the previous cycle, we did have that double top because it was a little bit different than previous cycles. And of course, as they say, history doesn't always repeat, but it certainly rhymes. We'll get a little bit more into that when I talk about the news. But again, I digress. Back to the vital statistics. For those of you following along at home, Bitcoin's current price gives it a market capitalization of $839.7 billion, about $15 billion less than last DCA Wednesday, but still the second highest market cap we've seen in months, if not years. Bitcoin hasn't had a market capitalization this high on any of my show notes that I'm scrolling back through, so at least for the last several months. For those of you who, like Peter Schiff, still value your wealth in shiny yellow rocks, it will currently cost you 21.7 ounces of gold to purchase just one Bitcoin. To put that in perspective, even though Peter Schiff and other gold bugs were out there doing victory laps when they set a new all-time high against US dollars, that is still twice as many ounces of gold to purchase just one Bitcoin than it would have cost you a year ago. In fact, 1 year ago today on the DCA Wednesday episode, I believe it was December 14th, so almost exactly a year ago today, it would cost you 9.6 ounces of gold to purchase just one Bitcoin. And now that's going to cost you 21.7 ounces. And as you know, I am a firm believer that gold is trending to zero ultimately against Bitcoin in terms of Bitcoin. Gold has had a nice run. Gold was the hardest money known to man before Bitcoin came along, but it's not our fault that we found something better, Peter. So, the amount of gold that is dug out of the earth, it continues to increase every year. And of course, the amount of Bitcoin in circulation, it continues to increase once every 10 minutes for the time being. But Bitcoin mathematically reduces that new circulation of Bitcoin in half every 4 years. And that's what the halving cycle is. And with this next halving cycle, Bitcoin's issuance will actually be more scarce than gold. And of course, gold, it actually is one of the more abundant elements in the universe. There's gold in the salt water, there's gold in the earth, there's gold in the skies. It's only a matter of time before someone figures out to harness that asteroid that's made out of more gold than completely, than has ever been found on planet Earth. And if that ever happens, of course, that would radically alter the supply of gold. So my point being, gold had been the hardest money known to man, the most solid money, the most sound money known to man. Of course, the term sound money comes from gold. But with the discovery, with the invention, or as most people like to refer to it now, Satoshi Nakamoto's discovery of Bitcoin, discovery of absolute mathematical scarcity as far as a peer-to-peer digital currency is concerned, we have found gold 2.0. So move over, Peter Schiff, and the sooner you do so, the better off you'll be, because everyone gets Bitcoin at the price they deserve. And right now, that price is 21.7 ounces of gold per Bitcoin. That will be in the pounds by the time we set a new all-time high. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 2,399 large pepperoni pizzas from Papa John's. That is one pizza a day for more than 6.5 years. That is a heck of a lot of pizza for just one Bitcoin. And of course, pizza as well as gold are trending to zero in Bitcoin terms. And we're watching that play out in real time because, it was just months ago when you couldn't even purchase 1,000 pizzas for one Bitcoin. And it's only a matter of time before we're talking about 10,000 pizzas or 20,000 pizzas or infinity pizza, eventually. But I digress once again. Looking at Bitcoin activity, the mempool is still completely clogged. According to Clark Moody's dashboard, there are approximately 60 blocks of transactions pending in his mempool. That is up from 53 last week. And other mempools with different settings show substantially more than 60 blocks worth of transactions pending. But we're going to stick with Clark Moody's dashboard because that's what we've been doing for the last 2.5 years. And, even if you want to say his is not necessarily the most reliable metric of determining what kind of transaction activity is pending, we're being consistent. So sometimes consistency is more important for identifying the trend than accuracy or technicalities, like maybe his mempool is restricted or kicking out older transactions sooner than other mempools. Once again, I digress. That clogged mempool means that on-chain fees, if you want to guarantee an on-chain transaction is included in the next block or right away, are absolutely through the roof. Clark Moody's dashboard is recommending a fee of 243 sats per VByte to guarantee your transactions mined in the next block. If you have up to a day to wait, they're recommending a fee of at least 33 sats per VByte. And as with last week, they're saying that that still a fee of 6 sats per VByte will eventually be mined within a week. Mempool.space is telling a slightly different story as usual. They're recommending a high priority transaction should include a fee of 150 sats per VByte, so almost 100 sats cheaper. And that still has a US dollar value of $9.01. So we're getting a lot closer to a $10 or more fee to guarantee your transactions mined immediately if you have a high priority transaction that you're conducting on chain. Of course, they're recommending that a low priority transaction has a fee of 121 sats per VByte, so that's not much of a discount. A no priority transaction that you can wait several days or a week or so for it to be mined, like for example, if you're just moving your own Bitcoin from one wallet to another, they're saying will be mined for a fee of as low as 28 sats per VByte. That's a you do you kind of thing. It depends on your situation. If you're buying a cup of coffee at Starbucks or whatever, that's just the proverbial purchase that Bitcoiners tend to talk about when they talk about using Bitcoin to make purchases. if a merchant is waiting for their Bitcoin and it needs to confirm in the next transaction, then you need to pay a higher fee. If you're sending Bitcoin to a friend or family member just to give them some Bitcoin or pay off a bet that you might have lost over the weekend, and it doesn't matter how fast it gets the transaction gets confirmed, as long as it shows up relatively soon, then you can get away with a slightly lower fee. And obviously, most wallets now will let you use either replace by fee or child pays for parent to bump that fee up if that transaction does get stuck or it's taking a little bit longer than you anticipated to confirm. So again, this is kind of one of those you do your own research, make decisions that fit your individual circumstances based on your specific needs. And these are just guidelines anyway. I wouldn't pay 243 sats per VByte to send a transaction if my life depended on it. Even if it needed to be guaranteed that it's going to clear in the next block or so, I would still be tempted to set it a lot lower and then bump that fee up after a block or so, because I've been watching mempool.space and I've seen times when it's recommending a high fee, say 250 sats per VByte, but then you look at the blocks coming in and the range of fees being paid in there, and sometimes that lower end fee is substantially cheaper. Again, these are just estimates that they're making based on what has happened in the past, and what has happened in the past is not always indicative of what's going to happen in the future. If you get a couple of blocks back to back, boom, boom, just like that, then they're going to have some lower fee transactions mined into that block, and maybe you'll get lucky. Again, that's a you do you, and I'm going off on another tangent. Speaking of on-chain activity, the metric that I like to follow, Bitcoin's 24-hour average transaction rate is absolutely soaring again. Currently, we're looking at an average transaction volume of 6.87 transactions per second, up from 5.53 transactions per second last Wednesday. And that means two things. It means those ordinals shenanigans, the inscriptions, the ordinals inscriptions, etc., the BRC20 token shenanigans are back in full effect. And I know this is a major point of contention on Bitcoin Twitter. You have people that say that, that you can't censor what the fair market should do, what should be in a valid Bitcoin block. That's not up to us. As long as they pay their miner fee, then they're playing by the rules. And other people saying, rightly probably, that this is actually an attack on Bitcoin. Not one that's going to be successful, mind you, but if you look at the people behind all this shenanigans, most of them are longtime hardcore BSVers. And for the entirety of BSV, and even before that, Bitcoin Cash's history, spamming the Bitcoin network has always been part of their strategy to try and say, look, Bitcoin's block sizes are too small, their transactions are too slow. You should use our infinite block size blockchain or whatever S-coin fork improvement that their particular S-coin has made. But Udi and those other wizards out there clowning around trying to break Bitcoin and laugh about it at the Bitcoin convention. Another bone I have to pick with Bitcoin Magazine. Eventually that's going to go away, but that doesn't mean there won't be some new shenanigans on the horizon. And as a result, sometimes it can get a little pricey to guarantee an on-chain transaction is included right away. If you have time to plan ahead, transaction fees tend to go down on nights and weekends. When I want to consolidate my transactions, or if I'm breaking in a new hardware wallet and I need to move my Bitcoin from one wallet to another or whatever, if I have a little bit of time, I usually try and make sure I do those transactions over the weekend. And of course, if you have a week or two to wait, you can do it whenever. Set that fee low and just let it ride and see what happens. Because as I mentioned, there are times when 3 or 4 blocks will come in when, normally one block is supposed to come in that 10-minute time span. Sometimes blocks come in simultaneously, instantaneously, just depending on which node you're looking at. One block might have even beat the other block. And so when that happens, there have been empty blocks that have even been mined. So I'm not paying any of those exorbitant fees. I'm not desperate to move my Bitcoin anywhere. And again, when we do our DCA Wednesday stack, one of the reasons we're sticking with Cash App, despite the fact I've complained about their recent fee structure changes, at least for the last 3 or 4 episodes, is because they will pay the mining fee to send that Bitcoin from your Cash App account to your cold storage. And so, quite frankly, I don't care what Cash App is paying in fees. As long as my Bitcoin gets there, that is not my concern. I mean, that's an oversimplification, but you get my point. And speaking of difficulty and Bitcoin mining, since we last spoke, The difficulty it takes to find the next block was adjusted downward. There was a 1% decrease in Bitcoin's mining difficulty. Of course, the mining difficulty is adjusted every 2016 blocks, which is theoretically every 2 weeks, with the goal of having one new block come in every 10 minutes on average. We're now 1,454 blocks away from the next mining difficulty adjustment. That's looking like that's going to be in about 10 days on December 23rd. So getting close to Christmas Eve. And depending on whose data you're looking at, that's going to be an increase of anywhere from 1.18% to 2.1%. So giving back that decrease that we saw just about a week ago, and then some, maybe as much as double, so we gave 1 inch and we're going to gain back 2. And in general, just like Bitcoin's price always going up and to the right, Bitcoin's mining difficulty is always going up and to the right as well, because as more people get into Bitcoin, as computer equipment and miners specifically get more powerful and more of them are manufactured and more corporate entities get involved in mining, or even potentially nation states are getting into mining, like in the Middle East, for example, the difficulty is just going to trend up and to the right. Currently, blocks are averaging 9 minutes and 49 seconds, and that is 11 seconds faster than 10 minutes per block. So if that keeps up, then of course, we're going to have a 1 to 2% difficulty increase. We're still, a long way away, and if more hash rate pours on, that can end up being a substantially larger increase. Or if hell freezes over and we have another ice storm in Texas, and the mining companies that have those power sharing agreements, those load balancing agreements with the grid, are forced to take their miners offline, who knows? Maybe we'll even see a decrease. My point being, overall, zooming out, hash rate, network hash rate, and mining difficulty is trending up and to the right. But for now, it is still, we still have those occasional mining difficulty decreases like we did last week. Real quick, I want to thank those of you listening on your favorite Podcasting 2.0 app, such as Fountain. Podcasting 2.0 lets you support your favorite podcasters on the value for value model by sending or streaming sats to your favorite podcasts. Of course, you can send a boost, which is basically a shout out where you send a message to your favorite podcast via a Lightning transaction, which allows you to support your favorite podcast and, give us your 2 cents, your 2 sats, let us know what you think, or just say hi. We do not have any boosts to read this week, but thank you to those of you, regardless of where you're listening and regardless of whether you can afford to stream sats to your favorite podcasts. Speaking of listeners, last week we had a little bit of a shakeup in our geographic distribution of listeners. Where you all are listening from changed a little bit. This week, that has remained exactly the same. So the same as last week. The change is still there, but no further changes have occurred. And our top 10 countries are as follows. As usual, number 1 remains the United States, where more than half of you are listening. So thank you to all of you out there listening in the United States, my fellow Americans. Of course, this podcast is coming to you from Florida here in the United States. So thank you very much to all my fellow Americans. Number 2 remains Argentina. They've been in the number 2 spot as long as I can remember. That is really gratifying because Argentina, there's been a lot going on there in the news recently. Argentina is certainly a country that understands monetary debasement. They understand inflation. They understand the need for a hard currency. So thank you to those of you listening in Argentina. Muchas gracias, amigos. Number 3 remains Germany. And I've always said German Bitcoiners just have more fun. I follow a lot of German Bitcoiners on Twitter, or I lurk and see, the different meetups they have, the different events they have. And there's something that just looks extra special fun about those Bitcoin meetups in Germany. And maybe one day I'll get there. Part of my plan one day in Bitcoin hyper-Bitcoinization, when we get to enjoy our lives a little more fully than we do in the short term, Germany is on my list for sure. So Dankeschön, mein Freund im Deutschland. Maybe I will get to see you sooner rather than later. Number 4 remains Luxembourg. And so once again, Dankeschön, mein Freund im Luxembourg, or Morgen in Luxembourgish. Number 5 remains Canada, where it's got to be getting increasingly dark and cold because we had a heck of a cold front move through here last week. And by a heck of a cold front, I mean it got down to 40 degrees. Not even 40. It got down into the upper 40s, lower 50s, depending where you're at in Florida. And that was enough to turn the air conditioning units off. And we even ran the heater one night. But nothing compared to what everybody in the northern United States, or north of the United States in the USA's attic, as Greg Foss likes to say, to those of you listening in Canada. So I salute those of you in areas where it gets ice cold, because I can't do it. So thank you to those of you in Canada and everywhere that's north of Florida. Good luck. Number 6 remains Spain, so muchas gracias, amigos, in Spain. Number 7 remains Colombia. Once again, muchas gracias. Hola, amigos. Number 8 remains Sweden. So thank you to those of you listening in Sweden who continue to occupy the number 8 spot in our Bitcoin Building Podcast listenership. Number 9, this was the big change last week, but it remains the same this week. Number 9 is the United Kingdom. So hello to all of you listening to the United Kingdom. It's really cool that you moved into the top 10 last week because on a personal level, my daughter is in London. She was in London a couple days ago, and she had a really neat story. They were wandering around London, and they somehow stumbled into an event where the current cast of Doctor Who was either filming or having an event, a promotional event. And she literally, almost literally, ran into one of her all-time heroes, Brian May from the band Queen. So that was really exciting. She's basically had the ultimate European British experience. Done all of course, done all of the iconic tourist things that she can do over there. Can you tell I'm jealous? I have never been to England. I've been to Europe. I've been to Germany. I've been to France. I've been to Austria, the Netherlands, Belgium, etc. But I've never ever set foot into the United Kingdom. Some of you listening over there would say, "You silly, you silly Yankee, you are in the United Kingdom. Happy Treason Day," or whatever, right? Because obviously we were part of the United Kingdom at one point in time. But I mean the United Kingdom proper. And by the way, you know what I was going to say. So thank you to those of you listening in the United Kingdom. Number 10, and this was a change from last week. The United Kingdom bumped Singapore down to the 10th spot where they remain. So number 10 remains Singapore. So thank you to those of you listening in Singapore. Venezuela had been number 10 for months and months, and they've got bumped out of the top 10 last week, but they're still hanging in at number 11. Another country that certainly understands the need for Bitcoin. So depending what happens with our listenership, maybe Venezuela will end up back in the top 10. It's really cool that so many of you are listening from there, even if it is just number 11 in our top 10 most popular countries. But thank you to you personally, regardless of where you're listening from. All that matters, it doesn't matter if you're in one of the top 10 countries or where you're listening from. All that matters is that you're listening and that we're helping you solidify those strong hands and that we're hopefully stacking sats alongside you as we head towards hyper Bitcoinization together, that brave new orange colored paradise, the utopia, the citadel in the future, our bright orange future together. All right, on to the news. Obviously, the price is the news. Often it shouldn't be, but it usually is. And even if the price wasn't the news sometimes affects the price, and that ends up being all that people talk about, or what people mainly talk about, not necessarily what the event was, but how it affected the price in US dollar terms or fiat terms, regardless of what fiat you use where you're listening. After last week's DCA Wednesday episode, Bitcoin retraced to as low as about $40,150. And even this morning, or late last night, or early this morning, depending where you're listening, but late last night in the AM early hours of this morning here in Florida, Bitcoin was as low as $40,844. Apparently more than $4 billion worth of Bitcoin was sold off during that retracement. Since then, it has regained most of the ground, and where we currently are sitting at about 42,900 is pretty darn similar to where we were last DCA Wednesday. Obviously, at one point in time, we saw Bitcoin run up to almost $45,000 or even over $45,000 briefly, depending on where you're looking at Bitcoin prices. But we haven't seen that yet as far as our DCA Wednesday series goes. So, doing a DCA series, doing a weekly stack, it forces you to zoom out really, because we look at Bitcoin's price based in relation to what it was when we last purchased, not necessarily to what it was yesterday. And so that helps force you to zoom out a little bit. What caused the pullback and recovery? Nobody really knows. Sometimes Bitcoin just does what Bitcoin does, but all the markets were up today, largely attributed to the Fed holding interest rates exactly where they have been and signaling that they're talking about maybe 3 quarter-point interest rate cuts in 2024. So that rallied the stock markets and around the world, but particularly the United States, where they set fresh new all-time highs. Who dumped their Bitcoin during the sell-off? Who knows? But hopefully you bought back in if you panic sold or got liquidated because of because of the algorithmic trades firing off one after another, breaking through those sell walls and the limit orders and forced liquidations. Of course, the run-up was most probably the market pricing in what now most view as the inevitability of the SEC approving a Bitcoin ETF soon. There were also those rumors about, Qatar and perhaps other nation states beginning to accumulate Bitcoin. We spoke a lot about that last week with Qatar possibly dumping a large portion of their sovereign wealth fund into Bitcoin. Remember, though, Adam Back, longtime Bitcoin OG, in fact, referenced by Satoshi Nakamoto as inspiration for Bitcoin, has that bet that Bitcoin will break $100,000 before the halving. That means before April 20th-ish of next spring. That would mean that this time is different because that has never happened before. As I pointed out last episode, Bitcoin has always been about 3 times the cycle low on the halving date. So basically that would mean that $45,000-ish would be the target price for where Bitcoin would be at the halving. We've basically always done that. However, how we've gotten there has been different each cycle. So if we go sideways for a while, that would be consistent with sticking with rhyming with history, sticking with the previous trends. But also, if Bitcoin were to go up, maybe Bitcoin gets up to $45,000, $50,000 and then dumps back down. That also would be consistent and rhyming with history, because if you look at a very interesting chart that Ecoinometrics put on Twitter, one that we've referenced in the past multiple times, but one that's a little more up to date now, you'll notice that the previous cycles, all of them, and even the trend, all show a dip. And if you look where that dip is, that lines up with about the end of 2024, pretty much exactly where we are now. And it's a pretty big dip, pretty substantial retracement, basically giving up a couple of months worth of gains entirely before slowly working back up to about where they were before the retracement, which in this case would be about $45,000, which would be exactly where we should be on halving day. So maybe Bitcoin's just doing what Bitcoin's doing. It's really interesting to see that in the previous cycle, Bitcoin was doing really well. And then what caused that dip in 2020? Well, we all know what happened 2 months before the halving in 2020, the lockdowns, etc. But just because, that was a black swan event that you would say, well, that's one of the chances of that ever happening again. Well, yeah, it probably won't. But still, the cycle before that had a very similar situation. So my point being, if Adam Back is right and we blast through $100,000, or even just blast through the previous all-time high before halving day, if Bitcoin breaks $69,000 before halving day, that would be different. That would be something that doesn't necessarily repeat or rhyme with history. This last cycle, we saw Bitcoin drop below its previous cycle's all-time high as the low of this cycle. That is something that had never happened before. So, some cycles are different. They say this time is different. And in some ways, all cycles always are. That's why the famous saying is that, history doesn't repeat, but it rhymes. Speaking of Bitcoin price and trends, Plan B on Twitter had an interesting tweet a couple hours ago now, where he tweeted that Facebook, Apple, Amazon, Netflix, Tesla, Nvidia all have 70% plus max drawdowns, just like Bitcoin. But Bitcoin has much higher returns. So from a portfolio management perspective, any combination of Bitcoin plus cash, and he says 100% plus 0 or 90% plus 10, etc., is better than a portfolio including any other asset. People like to talk about Bitcoin being volatile, and I think he points out some much needed clarity here that everything in life can be volatile, particularly tech stocks. Bitcoin is kind of in line with a tech commodity, so it would make sense that it would have the volatility of any other tech asset, in this case, the FANG stocks. So that's an interesting perspective. It's an interesting way to look at it. Of course, I don't want any combination of Bitcoin plus cash, because cash is a melting iceberg. Cash is devalued by a minimum of 2% every year on purpose. Why the heck you'd want to hold your assets in cash is beyond me. But again, you do you. And that's Plan B's perspective. In what I hope is positive news and just the beginning of more things to come. I kind of hinted at this when we were thanking those of you listening in Argentina. Down in Argentina, down from here anyway, if you look at the top of the earth is up, President Javier Milei was sworn into office on Sunday, marking the first time, at least that I'm aware of, and that anybody I've been following on Twitter is aware of, that a libertarian has been sworn into office as president of a major country, a significant country. Of course, he did so on the promise of eliminating their central bank. People have been trying to construe that means that he's going to put Argentina on a Bitcoin standard. I have never heard him say anything of the sort. He has mentioned maybe putting Argentina on a dollar standard, which is what El Salvador did before they made Bitcoin legal tender. But whether they go on a Bitcoin standard or not, Argentines, people in Argentina have suffered my entire lifetime through continuous hyperinflations and monetary defaults, all as the fault of their central bank printing and then defaulting, devaluing and defaulting on their money, printing their money into oblivion. Regardless of what Javier Milei does, if he sticks to what he's promised to do in the campaign and at least eliminates their Federal Reserve, their central bank, even if it's just to put Argentina on a dollar standard, that bodes tremendously well for Argentina. Argentina with a stable currency could literally become a powerhouse nation again, return to their former glory. You know, Buenos Aires used to be referred to as the Paris of South America, the Paris of the Americas, a beautiful city, a wonderful city with a lot of rich history that was destroyed in the World War II years by the Peronists, the Eva Peron years, the Don't Cry for Me Argentina thing, with Madonna playing Evita of Eva Peron. Basically, she was a cult of personality down in Argentina that was a national hero in the eyes of many, but led their country down a path of socialism. And the Peronists, the people influenced by that family, the legacy of Eva Peron has been draining on Argentina ever since that time, for what is that, 80 years ago. And it's just cool to see Argentina finally catch a break. Finally, hopefully shake off the shackles of those fiat shenanigans, of the heavily socialist-leaning aspect of their previous governments, printing money into oblivion for their social programs and their buy power and influence and corruption. And so congratulations, President Javier Milei. Congratulations to the Argentine people. That's really cool. Hopefully you get to experience great things. Hopefully Argentina will restore much of its lost glory. And that's really exciting. I firmly believe even if they don't adopt a Bitcoin standard, that even adopting a US dollar standard, while the US dollar is in fact an inflationary currency, it's nowhere near as inflationary as the 150% month over month inflation that Argentina has been subject to. Speaking of fiat shenanigans, of course, we spoke last week about Elizabeth Warren's bread and circuses before the U.S. Senate Banking Committee, where she had Jamie Dimon on, and they had a little anti-Bitcoin love fest together, hating on Bitcoin, where Jamie Dimon said if he was the government, he'd ban Bitcoin. And then shortly after that, we saw Elizabeth Warren's bill basically making self-custody potentially illegal and potentially even making Bitcoin mining or running even just a node illegal. Many have pointed out that Elizabeth Warren has never proposed a bill that's been passed into law. But the thing about authoritarians that's the whole camel's nose under the tent thing. All they were trying to do is just get their nose under the tent. And before long, the rest of the camel finds its way in. And that is how leftists, that is how dictators, fascist, totalitarians, whatever edge of the spectrum they are, aspiring dictators, they always start out by chiseling away at your freedoms under the guise that they're doing this to protect you or to make your life better. And of course, ultimately, you don't find out that what they had planned for you was catastrophic and horrible until it's too late. Freddie New on Twitter, at Freddie New, who says he's the head of the Bitcoin Policy UK, which sounds like our Bitcoin Policy Institute, but the UK version of it, posted an open letter to Elizabeth Warren on Twitter saying, "Dear at Senator Warren, I wish I didn't have to repost this, but it's pinned for a reason. My kids and I built a Raspberry Pi as a computer science project. We run it as a Bitcoin node for fun and educational purposes. Under your proposals, my kids are therefore classified as a money service business. This is absurd. I write as a lawyer and firmly believe that laws should be good, fair, and just, and not absurd. It's crucial that lawmakers try to understand the nature of things that they are trying to regulate, whether financial services or Bitcoin. You cannot stop children flipping a coin at home or building a single board computer for fun. Remember, if you've got enough support, you could pass a law banning gravity, but people would still fall downstairs." And then goes on to reference this bill. And this just goes hand in hand with what I've always said about us being in the "and then they fight you" phase. The United States specifically, we're unique compared to a lot of countries in the fact that we have a written constitution, a written Bill of Rights, putting restrictions on what government can and cannot do. It's arguable whether they follow that constitution at all anymore, whether it's been bastardized or perverted or not, how much it has been. But one thing remains crystal clear, and that is that we do have freedom of speech, and that the courts have ruled that code is speech. And so they know they can't flat out make Bitcoin code illegal, but what they can do is make it a pain for you to do so. They come at the on-ramps and the off-ramps, trying to regulate who can have an exchange. How they do that like in New York, where they have their bit license agreement, or just in general by saying if you're a Bitcoin business, then you're a money service provider, and so you have to have this banking licensing or money service provider licensing, which is very expensive, very difficult to get, and they can refuse to give you one. They do it by taxing the snot out of Bitcoin, and as far as their onerous, burdensome capital gains tax proposals. And in this case, Elizabeth Warren is further proposing to ratchet down on that by calling you a money service provider if you run a Bitcoin node at home. Therefore, while they can't prevent you from doing it, they can crack down on you, and hopefully you're not the one person they find and make a glaring example out of when they give you 3 or 4 consecutive life sentences and send you off to a supermax prison to sit next to, Ross Ulbricht and other people they've made examples of, where they hope to have Julian Assange one day. Speaking of horrific government crackdowns, this is kind of breaking news. As you have probably heard, the Senate has been passing the Defense Authorization Act, basically, and in that they've hidden a provision that would expand Section 702. That's basically the authority that the government has been using to spy on American citizens, to record our phone calls, our metadata, or whatever, in the name of protecting us from terrorists. In the past, they've been able to go to your phone company under the third-party doctrine and say, oh, we're not searching you. AT&T has this information, and they're providing it to us. This expands that. This proposed legislation expands that to basically expand who would be required to turn over your information from just these telecommunication companies to any company that might come into contact with your data or your communications. This has been pointed out could mean the cable repair guy that has access to your router or your modem, or even any public Wi-Fi. Like if you go to Starbucks or McDonald's and you log into their public Wi-Fi, the government could force them, or even do so without their knowledge, to turn over your private communications under this doctrine. Edward Snowden tweeted right before I started recording, by 6 votes, the Senate just forced through a violation of your constitutional rights. Now all eyes turn to the House. They will put it for a vote tomorrow. Call your representative because this is your last chance. Tell them to stop the NDAA. If you're in the United States, by all means do so. Find out who your who your representative is for your district, or any of the representatives from your state. Call them. Tell them this is unconstitutional. This is a blatant overreach, a violation of your rights, and you expect that they vote against it, or you will be voting against them. This can make a difference. It was a very close vote in the Democrat-controlled Senate. The House is controlled by Republicans. They're at odds with the Democrats, so that we already have a fighting chance for them to tell the Democrats to go pound sand. Unfortunately, when it comes to defense bills, to spending money supporting foreign wars, and to violating our rights, the left and the right tend to be unanimous in their agreement on this. But it's not too late. You have until tomorrow to call your representative's office and tell them to put a stop to this. This will have impacts not just on your life here in the United States or anywhere in the world, because we're going to spy on you regardless of what country you're in. But the easier we let our spy agencies run amok, the more that's going to catch people that aren't in the United States up in the dragnet. And this will have reverberations into Bitcoin. In the positive news, the generally accepted accounting principles, the new FASB GAAP rules have gone into effect. Previously, as we've spoken about on other podcasts, and as Michael Saylor has so referenced, assets like Bitcoin, if the price went down, you were forced to report it as a loss. When the value of Bitcoin went back up, you were not allowed to say that it's worth more now and to report it as a gain. Those rules were proposed to have been changed. And from what I heard on the Cafe Bitcoin podcast this morning, those changes have now gone into effect. That is really cool. This is one of those 5 things that Michael Saylor said had to happen for hyper-Bitcoinization. And so it's a done deal. Check that one off the blocks. That's happened now, and that makes it a heck of a lot easier for companies to put Bitcoin on their balance sheet in the United States. So this is the exact opposite of one of those, and then they fight you sort of things. A rare moment of positivism, of hope, of things making it easier to hold Bitcoin. Of course, they're making it easier for their rich cronies on Wall Street to hold Bitcoin, not for you to hold Bitcoin. That goes back to what I ranted about on the previous episode, where I said they're fine with Bitcoin as long as it's just another asset they can use to make money, that they can use to make their friends rich, so that their friends can donate to their campaigns and throw giant re-election parties for them, etc. Fly them around on their private jets as favors. So, the United States isn't going to try and squash Bitcoin. I guess this does kind of go hand in hand with them hoping that Bitcoin becomes the domain of rich Wall Street titans and not of the average pleb. So Seeking Alpha reported their headline along these lines: Bitcoin erases week's losses as FASB guidelines set to beef up adoption. Bitcoin gains momentum as new accounting rules for business are confirmed, allowing companies to record gains and losses immediately. This is a big deal. This can't be understated. If all you're in it for is number go up, if you don't care about running your own node, keeping self-custody of your own Bitcoin, if all you're in it for is the gains, this is hugely positive for you, because in Elizabeth Warren's world, in Jamie Dimon's world, where they control all the money and they control all the Bitcoin, the little Bitcoin that you do have will go up in value. So at least there's that, right? Last but not least, also on the Cafe Bitcoin podcast, Alex Vetsky was on talking about his piece, Bitcoin and Friedrich Nietzsche, or Friedrich Nietzsche and Bitcoin, where he was talking about evolution and how Western societies were doomed to fail, and how they basically cannibalized themselves. They always have, and they always will. There's no reason to believe the United States won't fall just like Rome, like every other empire in the past has. But he also mentioned that Bitcoin, for the first time, might actually interrupt evolution, because he points out that how Bitcoin changes you and how Bitcoiners and Bitcoin plebs tend to be more outgoing, more positive, optimistic. We tend to not follow the crowd. We tend to break the rules. We're not lining up to have our 6th or 7th dose of a mandatory vaccine. We're not wearing the face diapers. We're willing to go outside and be in the sunshine when everyone else is locking themselves in the dark rooms. We eat the beef, we drink the milk, we eat the butter. A lifestyle that is 180 degrees opposite of the normie. And so when you think about that, and you think about evolution and how the human species evolves over time, if you have this group of plebs locked in their basement in a dark room, eating their vegan lifestyle, living in the pod, eating the bugs, as he says, the genetics that they pass along versus the genetics that the average pleb who works out, goes outside, eats raw meat, lives a rugged individualistic lifestyle, that the genetics that they pass along are going to be divergent from the normie DNA. And he jokingly says we may end up with 2 separate species one day, which he calls the Homo hystericus and the Homo Bitcoinicus, which is, really funny that you've got the hysterical humans and the Bitcoin humans. But it's a really interesting piece. And if you haven't read it, you should read it. If you don't have the time to read it, Cafe Bitcoin is a Twitter Spaces, but they record it as a podcast, and you can listen to it on your favorite podcasting app. And it is, of course, the second half of the Cafe Bitcoin podcast, because it's like a 2-hour Spaces, and they talk about Bitcoin news and events, etc., for like the first hour, and then the last hour, half an hour, they have their featured guest on. So it gets into that last part of the show if you want to listen to. VJ Boyabadi comes on after. First comes on Alex Vetsky, and he talks about Nietzsche and Bitcoin and Bitcoiners versus normies. All right, so I already spoke heavily last episode about why this time may possibly be different, and we went over the crypto winter timelines, the Bitcoin winters of the past, what a normal cycle looks like, and what this cycle has looked like, and how in general this cycle has rhymed really well. If you zoom out and you don't look at the average of the last cycles, but you look at the shape, the trend of the last cycles, I think you'll see that this time has not been much different yet. We won't know until this cycle is completely over in April, but it's looking pretty similar to the previous. We just got done repeating 2019, and we're heading into the beginning of 2020, just as we are wrapping up 2023 and heading into 2024. I don't need to beat that into the ground any further. So let's get to why we're here. And we're here because today is Wednesday, and every Wednesday is our dollar cost average Wednesday, our DCA Wednesday episode, where we invest a little bit of US dollars into Bitcoin and grow what will hopefully be a meaningful stack of Satoshis one day. We started doing this all the way back on July 28th of 2021, and we've stacked 124 times, socking away $2,480 worth of fiat, including fees and now Cash App spread, and building a stack of almost 8.5 million sats, 8,497,467 sats to be correct, precise. And we've done so now at an average cost basis of $29,185.17. So significantly less money than what Bitcoin's currently valued at. If you don't know what I'm talking about, we're talking about dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, we chose an equal portion of just $20, and we stuck with $20 for the last 2.5 years because I wanted to stack a fiat amount that was small enough that almost anyone listening to this podcast should be able to come up with $20 a week. Of course, weekly is our interval. Those are both you do you things. If $20 is nothing to you, by all means, make your own determination and stack the equivalent fiat value that you would be comfortable stacking. And same thing with time frame. There's people out there DCAing hourly, minutely, daily. Most people DCA on their payday or near their payday. So if you get paid every 2 weeks, maybe you DCA bi-weekly. If you get paid weekly, maybe that's weekly. We chose weekly and we chose $20. And this is going to be the 125th week that we've converted 20 filthy fiat cuckbucks into Satoshis. It's going to mark a grand total of 2,500 cuckbucks that we've converted into sats. And to do so, as usual, we are using the Cash App. One of the reasons I like the Cash App, despite the fact I'm not a fan of the new fee structure, is that I don't have any money on the Cash App right now. So they're going to let me add cash immediately. I have a debit card linked to my Cash App, and I'm doing that right now. I'm adding $20. And boom, it's already in my account. I can already spend it on Bitcoin. And some apps, some exchanges will let you do that, but then they'll make you wait 5 days or a week or 2 weeks before you can transfer your Bitcoin because they want to make sure that cash settles. Cash App isn't going to do that. They're letting me put $20 on my Cash App right now. They're going to let me purchase Bitcoin right now, and they will let me transfer it to my hardware wallet right now, which is really cool. So if Cash App is available where you're at and you don't use it, they are not a sponsor of the show, but we do have a referral code in the show notes where you'll get some money for free for signing up, and the podcast will as well. So I think the current offer is like $5. So you get $5 free, and we'll get $5 as well for you signing up and using Cash App. And that's one way you can help support the podcast while getting paid to do so yourself. You won't necessarily, you'll be receiving money to help support the podcast, and that's pretty cool. So Cash App might not even be available where you are, but I have other referral codes in the show notes. If there is an app or service you're considering using, such as Fold or such as Strike, we do have referral codes. None of those are sponsors of the podcast. Anyone who has an account with any of those services gets their own custom referral code. You will too if you sign up, that you can pass on to friends and family members so that you can get that reward. In the meantime, if you would consider using our referral code, that will help the podcast because we'll get that reward as well as that, just like you will. So you'll get paid to help support the podcast. I already have that $20 added to my Cash App. So I'm tapping Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we've purchased another 45,667 sats. That's awesome because last week we only got 44,411 sats for our purchase. So the fact that we purchased a little bit cheaper this week, I guess we purchased at a price of $42,810 with fees. And with that spread, however, we actually paid an effective price of $43,795.30. And that is going to increase our average purchase price. We're still way in the green, but it's increasing our average purchase price by $70.10 to a new average cost basis of $29,263.27. Still way cheaper than the current price of Bitcoin. Unfortunately, as Bitcoin goes up in value, our average cost basis is going to go up in value as well. But the cool thing about DCAing is that we bought the all-time high, and then we bought all the way down throughout the Bitcoin winter. So we took advantage of those cheap prices and lowered that average cost basis. Because as you remember, we started out with an average purchase price of like $35,000 and worked our way down to like $25,000 or $26,000. So we've already spoken about why I think this experiment has proven that we were better off DCAing versus YOLOing, because We ended up with more than 2 million more sats than we would have if we would have done that whole purchase at $35,000 back in July of 2021. Perhaps more importantly, that has raised our stack of Satoshis up to 8,543,134 sats, more than 8.5 million sats, still shy of our 10 million sat goal that I have for this DCA podcast series. But if Bitcoin blasts through its previous all-time high and hits just as high as maybe $100,000, which I don't know anybody that thinks that's way out of the picture. When Bitcoin's price hits 100K US dollars, this stack will be worth $8,543.13. Obviously a lot more than the $2,500 we've converted into Bitcoin. And if Bitcoin hits 1 million, that stack will be worth $85,431.34. And I don't care what country you're living in and what your financial position is, turning $2,500 into $85,000 is going to be life-changing for most people I know. You're not going to retire on $85,000 in the United States, but there are countries where you can live a much better life if you have $85,000 in your savings account than you can now. And by savings account, I'm referring to your hardware wallet, not actual savings account, because I don't intend to ever convert that back into fiat. Why would you, when you know that the minute you do, regardless of what fiat you're using, that the purchasing value of that 8.5 million Satoshis is going to start going down instead of going up. And that's not too shabby for $2,500. Hopefully you've been following along and have stacked at least that much Bitcoin. Real quick, I want to ask those of you listening to help support the podcast, and you can do that in numerous ways. I'm not necessarily talking financially. Probably the best, most helpful thing you could do is to rate or review this podcast on the app that you're listening to us on. A 5-star review will do tremendous things to feed the algorithm monster. The more reviews, the more interaction, the more activity this podcast gets, the more likely they are to recommend it to other plebs, the more likely we are to help Orange Pill more normies get them stacking Bitcoin. The other way you could do so is to follow us on Twitter. Again, this will feed the algorithm monster, and the more Twitter followers we have, the more reach we'll get. On Twitter, we are at BTC Bulletin Pod, at BTC Bulletin Pod. So please consider following us on Twitter. I also would like to hear from you. Of course, you can send us a boost where we can hear from you, and you can tip the podcast in doing so. Of course, if you do, we'll read your boost on the next Bitcoin Bulletin podcast. But I just want to hear from you regardless. So DM me on Twitter at BTC Bulletin Pod and let me know. If you feel so inclined, you can also tip the podcast on Twitter, and you can support us directly through our Spotify support link. Of course, listening on Fountain and your favorite podcasting 2.0 apps allows you to support us with the value for value method, where you can stream us sats on a per minute basis, or you can support us with that boost that we mentioned. And of course, we read our boosts providing they're nothing obscene, and we've never had to censor a boost before. All of our supporters have been awesome. So that's one way you can help support us. Another way, as I mentioned, is we have those referrals in our show notes. If you are considering using Cash App, for example, clicking that link and signing up that way, you'll get $5 free, and we'll get $5, so you'll get paid to help support the podcast. Strike currently has a $10 bonus. If you sign up and with Strike using that referral code, we'll get $10 and you'll get $10. And Fold currently has a 20,000 sat bonus for signing up for their free debit card, and we would receive 20,000 sats as well. And for those of you who don't use Twitter and are not in a position to help support the podcast, I still want to hear from you. So if you would like to contact us via email, you can always do it that way. And our email address is bitcoinbulletin@protonmail.com. So on Twitter, we're at BTC Bulletin Pod, and our email is bitcoinbulletin@protonmail.com. Until then, don't forget to join us this Wednesday and every Wednesday for our DCA Wednesday episode, where we grow that stack together. But until that time, keep on stacking those sats, you sexy sat stackers.